There's no doubt over the past 10 plus years, no single entity has had a bigger impact on global financial markets than the Fed. So that's where we're starting. And you think about where we were last year, we were expecting Fed cuts, a lot of Fed support. Now the market is expecting basically nothing. And then always a big theme will be the corporate earnings cycle, and with that, the buyback cycle. And when you start to think about those things and you think, corporate earnings corporate earnings growth right now is basically just buybacks. And the buyback cycle is in line with the credit cycle. We're going to spend a lot of time talking about the credit cycle. We're at record levels of corporate debt to GDP, record levels of consumer debt outstanding. That's definitely going to be a big component of our outlook.
What other things will be important for us to be on the lookout for in 2020?
Certainly geopolitical tensions and trade tensions.
Already seeing some of those?
Yes, definitely seeing some of those with the conflict with Iran, but then also U.S.-China trade negotiations. Is the Phase 1 deal actually going to be implemented? Is it actually impactful? And is it to the point where China feels comfortable enough really firing the stimulus bazooka?
And then I would also think that at some point, the whole idea of monetary policy and what the next evolution of that looks like and what can be done on the fiscal side versus the monetary side will start to become a hotter and hotter topic as the wealth gap increases, because what we've created is a continuation of the wealth gap. We've really spread it apart. People who own stocks are wealthier. People who don't aren't gaining that wealth because their wages aren't rising. Although it was a good year for wages, they weren't rising to the level that people's stock wealth was.
Exactly. And to that, a new term is being thrown out. We've heard quantitative easing, QE for the people.
QE for the people.
Not for the banks. So the Fed isn't just buying assets to put more reserves on bank balance sheets and pump up stock prices. They're literally just giving money to consumers.